Ladies and gentlemen, the British housing market hasn't moved for almost 4 years. The housing market is actually not moving for almost 4 years, and before this period was pumped by printed empty money during 2020 and by lowering interest rate to zero. The housing market in the United Kingdom for last 4 years is one of the actually worst markets in Europe and maybe around the world to invest. Please look at this data. In 2025, the average house price by Halifax index is £299,000. However, ladies and gentlemen, in 2022, the average house price was no more, no less, actually almost the same. It was £292,000. We know that the average housing price can't be measured exactly how it is. It is not a gold price. We know that many houses in last 4 years were refurbished, fixed and heated. That means this price must actually be calculated. The average housing the average house price in the United Kingdom is actually doing very bad for the investors. This is not worth it to invest in housing market in the United Kingdom anymore compared to other assets around the world. The very cheap houses in Italy, very cheap houses in Spain, very cheap houses in Greece and everywhere around the Europe are showing up. How on earth you would spend 300k for the British house if for 1/3 of this price you would buy, or even 1/5 of this price, for 20% of this price you would buy house in Spain, in Italy, in Greece, and in many other countries around the Europe. This is the reality, and actually it will proceed more and more. Moreover, another bad thing about the housing market in the United Kingdom and profitability, and actually factor that would give you profit is comparing it to gold. Ladies and gentlemen, this chart represents the gold price to Australian dollar, and this really represents what is happening with the post-colonial currency called Australian dollar. It looks like a Zimbabwe dollar. Actually, it's not so bad like Zimbabwe dollar, but it looks like, for many people that don't understand the charts, don't understand numbers, it looks like the Australian dollar. That chart represents the collapse of the Australian dollar. Please look at this, what is happening to silver. This is actually is showing the silver price from please look at this. The Australian dollar collapsed from look at this, from 18, 15, 19 Australian dollars for 1 ounce of silver to almost 70. It was already, please look at this, almost $70 in just few years. 63, 64, almost $64 for each coin. However, the gold price looks even stranger. This is the gold price in dollars, $3,648 for each coin, for each ounce. It was actually $3,700 for 1 little ounce of gold. But this represents the gold price in Australian dollar. Please look at this. In 2021, the gold price, as the candlestick chart shows, it was only 2,200. Today, it is 5,500, okay? It was 56 just actually 2 days ago. 5,600, 5,600 Australian dollars from 2000 since 2021, and this represents the real crash of the housing market in the United Kingdom, as the housing market since 2022 even not moved. First, it's dropped heavily throughout 2022, 23, 24 started recovering, reaching the same price as in 2022. Some journalists, some fake charlatans, they say the housing market in the United Kingdom gained 30 or 40 they say even that housing market in the United Kingdom gained 25% in last 3 years, but they are not saying what happened just 4 years ago. Okay, that first it dropped and now it is on the same level as in 2022. They are liars. The housing market recovered to the nominal price of 2022. However, ladies and gentlemen, so much money was printed, and on the top of it, we have to understand that many of those houses were refurbished, fixed, and then sold for 3K. They couldn't sell it. For 300K. So they added extra things, and they said the houses were sold maybe with a little profit or no profit, ladies and gentlemen. Exactly, this is what is happening in the United Kingdom housing market at the moment. I will show you something now. This is investment compounding calculator, compound interest calculator. Ladies and gentlemen, if you actually decided in 2006 that instead of putting your money in 300k London property, that today maybe the price is 600, because in 2005-6 then it was the housing market dropped and then recovered again. So many houses in the United Kingdom, in London in 2005 you would have to pay maybe 300k. Then it dropped, okay, and today maybe this house price maybe is 450, maybe 500, okay? So if you decided to buy the house in London for 300k in 2006, you would today have this house, of course, rented, or you would live in it. Well, if you live in the house, you have to live somewhere, okay? But if you actually decided to buy this house for investment purpose, then today you have this house as an investment, and probably this house, the price house, is no more than 500k if you actually decided to buy just before the 2006-8-9 crash, okay, because then it crashed. Many houses in the United Kingdom, people that time were using the interest rate only. It was pumped. And the housing market in the United Kingdom recovered in 2007, 2008, 2009 because of the mass worker coming to the United Kingdom. Millions of Lithuanians, Czechs, Slovaks, Hungarians, Estonians, from the Central Europe, Poles came to the United Kingdom, and actually they were filling these houses, they were living in those houses. That's why the housing market recovered in the United Kingdom after 2007-8-9 crash. Okay, that would never happen if not the Central Europeans in the United Kingdom. And what this mean? That means you would have today this house, the price of the house would be around 500, and of course you would maybe pay off almost all your mortgage. It depends how much deposit you put to that mortgage, or if you took it as interest rate buy to let, so you still have 300k to pay off. And high interest rate today as the interest, or maybe you have the fixed mortgage, so you pay less interest rate, but soon probably will come to the end of your fixed period and you will pay more interest rate than before. So you have house is 500k, you have to pay the 300k remainings because you took only interest rate. But if there is another person, if we compare another person that decided not to buy the house in London, but took this 300k and invested in gold. And if we use this investment compounding calculator, ladies and gentlemen, then we understand what happened. The average price rise counted as compounding interest rate was in last 19 years on gold 12.3 to British pound according to official and only data. Buying 300k gold in 19 years ago would give you until today, ladies and gentlemen, 2,718,000 pounds. So for 300k gold, okay, you today would have almost 3 million pounds. Okay, so we have two people. Gold investor, today he is 3 mil. Okay, 3 mil. Pure profit, 2.5 pure profit, ladies and gentlemen, and invested only 300k. And on another hand, okay, we have this another property investor, okay, that has house. Well, if he paid off the mortgage, today he has 500. If he actually purchased that house by cash, today he has 500 pure. If he sell it and must pay taxes also. Okay, so the investment is not comparable. You can't even compare it. The housing market in the United Kingdom ended in 2007 and it was pumped since that time by printed money, low interest rate, and coming many Europeans to the United Kingdom, but it ended. Europeans are not coming to the United Kingdom, and the Europeans actually increased those housing prices, those prices, this average house price, but they are Europeans. But now the people who are coming to the United Kingdom are not Europeans, and because of that, because the standard, the social, the culture is going the way that the Europeans and even English, Scottish don't want it. So they are leaving. So the housing market will be actually rotting. Okay? 3 mil for buying gold. Almost no gain by buying London house. Thank you very much, ladies and gentlemen. I hope soon we'll release another video, and I hope to see you as soon as possible on my Gregory's Economics channel. Thank you. Bye bye.